around Ventura County, goes all the way to Carpinteria, Ventura, Oxnard, um, Camarillo, Thousand Oaks, Newberry Park, Westlake. Um, right before Calabasas, and then a little bit more towards the beach. It also includes Park Malibu, so that would be considered Oak Park, Moore Park, Simi Valley. That is all considered Ventura County. But all right. So when getting started, the very first thing, and I want to put you in the right state of mind first, is mindset. Okay, so when you are getting into trading, how many of you are scared to start trading? And be honest, right? I'm a very honest, straight person. How many of you guys are scared to start trading because you heard trading is gambling, people losing money, etc., etc.? How many people honestly are scared to start? Right? And there's a handful, right? About a little more than a dozen. Right? Now, what are some of those reasons? And I want to hear from you. I don't want to assume. Why are you scared? Just take some time, type it in. What is scaring you? What is preventing you from getting into this? You're afraid of losing money. Not sure even how to start. Knowledge, you don't have the right knowledge. Being wrong and taking losses. You have lost a lot already trying to do it by yourself. Lack of knowledge. Just jumped in and lost. Mechanics of trading. Losing money and not sure how to start. Not knowing where and how. I have trouble getting out of greed. Still learning how to be profitable. Using that platform efficiently. The technology is intimidating. Strategy is not consistent. Reading the charts, the software interface, high probability setups. Okay, so quite a bit, right? Fighting FOMO. So knowledge, from what I can see, is a big part of this, right? So not having the knowledge, and then also maybe many of you have come from hearing certain things about trading that is already kind of putting a little bit, maybe some of you think trading is gambling, maybe you're going to think you're going to lose all of your money. How many of you that are currently on this stream with me right now think that you need thousands and thousands of dollars to trade? I'm curious how many people still have that mindset. You need thousands and thousands and thousands of dollars to trade. There's a couple. Okay. The reality is you do not. Okay, and we're gonna get through that here as we get into this program. But I can tell you there are two barriers to getting involved in the market. Number one is education. So with a lack of knowledge, when we lack something we don't know, we're already going to fear it, right? We already think like, oh, we can't do it, we can't obtain it. Speaking for myself, when I was first getting involved in the market, is I used to think that the market was just for the wealthy. I used to think that the market was for people that were extremely smart, wearing glasses, collar shirts, sitting at a desk all day long, and those were the people that were successful at trading in the market. Fast forward to today, the market is everybody. It knows no color, knows no religion, knows no economical background or your status. It doesn't care whether you are the mayor of a city or a brand new high school student. It doesn't matter. Anybody can trade and be involved in the market today, and that's what makes this so beautiful today, is that there is a lot of more people getting involved in the market. I remember I used to, in the beginning of trading back in 2009, 2010, even up into 2014, I would turn blue in the face trying to convince people to get involved in trading. And it wasn't until COVID happened where everything kind of started to bump up for trading and become more popular. Wall Street Bets and the whole GameStop saga and all of that kind of also helped the spark as well. But trading, I will say, once you can get the education and once you realize that there are ways to go about it without risking your hard-earned capital, it makes it less daunting. I'm not one to. Everybody knows which way I swing, but I'm not trying to put anybody down that swings the other way. They're completely fine. Some of the analogies I only use based off of my background. So an example that I can give is shooting guns. Okay, so when people first, some people, right, whether it's female or male or whoever, sometimes when I get them in a class to want to learn how to shoot a firearm, they're very scared. They're shaking, the girl's shaking. They have this crazy idea of what their perception of what a gun does and is, and it's not until you put an empty gun in their hand and walk them through that process to then being able to take their first shot do they start to become more comfortable with it, right? So many of you haven't taken your first shot trading because you're still in the shaking phase. You're still like, oh my god, this is very scary, this is very intimidating. But it's not until we start to educate ourselves around it and not until we start to do it does it become easier and more comfortable for us to do. Okay? So, and then the next thing that I'll say before I start to dive into this is mindset. Okay, so number one, I don't think you would join a Sunday seminar if you didn't already start to have the initial thing that you need for mindset, which is putting yourself in an abundant mindset versus a scarcity mindset. When we think in scarcity terms, right, it's like, again, this isn't for me, I can't be successful at this, you're already being negative, and by being negative, you're never going to achieve whatever goal it is that you want to put out. But if you think abundantly, like, I deserve to be successful at this market, I deserve to make whatever in this market, I'm going to put myself and my energy in a place to be receptive of what the market is going to give me. Then, just mindset alone, yes, the law of attraction can be a really big thing. So, anyway, we're going to jump into this and get started. Now, the very first thing of getting started is not what I'm showing you here on this screen, which is looking at charts. Okay, the very first thing of getting started is setting up your platform, setting up your brokerage, and taking the very first step to putting yourself in a situation that forces you to start trading. So the very first thing we need to do is open up a brokerage. Now, I'm going to teach you both ways, and you guys can decide what you want to do based off of what I am sharing with you. Okay, so to get started with the brokerage, you just go to Google. Okay, and if you are trading outside of a firm, you are considered a retail trader. Okay. So one of the things you could do is type in retail brokerages, okay? And then often there will be a list here of different brokerages that you can use. Webull, E-Trade, you could even trade through Wikipedia, I guess, these days, okay? Top 5 largest brokerages first, okay? Charles Schwab is another. Okay. Now, this is the platform that we have used for a very long time. It used to be called TD Ameritrade. Charles Schwab bought TD Ameritrade, and now it's all under Charles Schwab. Within Charles Schwab, when you click on here, there are different accounts that you can set up for. Okay, you could do a personal, you could do a retirement account. There's individual accounts that you can pick from. There's different types of investment products: ETF, mutual fund, stocks, options, futures, bonds, money market. I mean, the list goes on, right? So it's this. Even just this screen can be daunting for a lot of people. Okay. However, I'm going to guide you through some of the different accounts that you can set up, and then you can decide what you want to do. Okay. So when you first go over here to open an account, you can do an individual brokerage. With this account, you could do stocks, options, bonds, even futures. Same thing with the joint brokerage. You could do trade out of a Roth, a traditional Roth, a rollover IRA. You could have, if you're going to do a personal trust, you could do a single trustee or a co-trustee. I mean, the list goes on. Okay. You could even call somebody if you want some advice, right? And figure out what's going to work for you. 90% of the people that are going to trade with their own money tend to do an individual brokerage. Okay. Now, there are pros and cons to trading out of an individual brokerage, and this is if you want to trade with your money. Okay. So, if we were to kind of bucket this, and if you're like taking notes, right, it would be A, using my own money. What are some firms that I could do? What are some options that I can do? So if you're going to be using your hard-earned money, you could go through Charles Schwab. One of the accounts that you can set up is called an individual brokerage. There is no minimum limit to how much you start with, and there's no maximum of how much you can put in. Trading out of an individual brokerage, it then splits into two different categories: cash accounts and margin accounts. And I know this may go a little fast, but I'm going to do my very best to slow down. If you guys have questions, please make sure you're typing them out, and I'll be happy to answer them along the way. And I'll even pause to try to help you guys out. So in an individual brokerage, using a cash account, you can start an account with as little as $500, $1,000, $5,000, $10,000, and you can trade using that money. The caveat to having an individual brokerage account that is a cash account with less than $25,000 in it is that you will become limited by the amount of cash that is in that account. The best example that I can give is, let's say you started an individual brokerage account and it was a cash account and you funded $5,000. Okay, so you put $5,000 of your hard-earned money into this account. As you trade, let's say you decide to day trade like how I do, and on Monday you decide to use $4,000 of that $5,000. Okay, well, when Tuesday rolls around, you're only going to have $1,000 available, because the money that you used on Monday is going to take time to become what is called realized and come back into your account. Often that takes somewhere between 24 to 48 hours, depending on the firm that you're using. Okay. Another firm aside from Charles Schwab is Webull. Okay.
Hey, what's up,
These will
Kashi?
be the two platforms that I would
never had a
recommend
girlfriend? What the
if
heck?
you are looking to get started. Webull.
Are you serious or are you joking?
TD Ameritrade.
Kashi, I haven't seen you, brother.
More hurdles
Good to see you.
the platform than Webull, but it also provides a lot more for you in terms of programs that you can get involved in. Okay, and it's been around for a long time. So this is also really good because then you can you have a little bit more security, right, in your orders just go through pretty well on Charles Schwab versus Google. Now, with a margin account, if you so going back to an individual account, you have cash account, margin account. With trading in a margin account, you have to have a limit, a minimum of $25,000 in that account to day trade unlimitedly. This means when I buy and sell something on the same day, whatever profit or loss that I gain becomes realized immediately. And then if I decide to take another trade or another trade, that money is becoming realized immediately. That's one of the pros of having a individual margin account that
You
is
never
funded
had
with
one girlfriend, but you've had multiples at a time,
I was
right?
to do a poll, and I'm not going to do
Ah,
that.
you're one of those guys.
Rhetorical question. How many of you
you're a
have
player.
$25,000 to put in a margin account? Right? How many of you have an extra 25K to put into a margin account and without having any knowledge be willing to risk it? Right? There's not a whole lot of Americans right now that have that luxury. Okay, and if you are, then that's great. But the reality is there's not a lot. So your two choices, right, is I can either trade with my own cash in a cash account and get limited by that cash. So if I had $5,000, what I would do is I would stagger it along the days. I may trade with 1,500 on Monday, 1,500 on Tuesday, 1,500 on Wednesday, $1,500 on Thursday, and then Friday. And then this way, I'm not using a whole bulk of my money in just one day. That's the way that you can make a cash account work. Other thing is you don't have to day trade. And I'm going to kind of get into the definitions here, the difference between day trading, swing trading, investing, position sizing, etc. Um, where day trading is defined as the market opens at 6:30 a.m. Pacific Standard Time and closes at 1 p.m. Those are considered regular hours. Anything that I buy and sell within that day, a regular hour day, that is considered a day trade. No matter how long I hold it, as long as I'm done before 1 o'clock p.m. Pacific Standard Time, that is day trading. If I was to buy something on Monday and sell it on Tuesday, or sell it on Wednesday, or sell it on Thursday or Friday, that is considered a swing trade. I buy something one day and I don't sell it for until the next day or days later or even weeks later. That is considered a swing trade. When you are swing trading, you are not bound to the day trading rules of having to have 25K in your account to be able to trade unlimitedly. Okay. Um, so that's how you could go through here. And then again, with this, you can invest in stocks, you can do options, you could do futures. You just have to sign up for it. Now, that's an individual brokerage. Now, with an individual brokerage, for those that don't know, okay, is the one of the biggest drawbacks of it is that any losses that you occur or accrue for the year, excuse me, is that the most that you could write off is $3,000 in capital loss. So let's say you had an individual brokerage, you funded it with $25,000, you wanted to put it up with a margin account, and let's say for whatever reason you lost $10,000. Okay, you're only going to be able to show $3,000 in losses in your your report. So you don't want to ultimately do that, you know. However, this may, again, 90% of people are going to fall within this because they can't afford the alternative, which the alternative is opening up a business account. Now, the pro of a business account is you can offset your losses with your wins the next year. Example, let's say you opened up a business account in year one, you fund it with, let's say, well, with the business account, number one, you need 250 grand. So let's say you fund it with 250 grand, you lose, I don't know, 10,000 on year one. Year two, let's say you make 15. Well, year two, for your capital gain, you're only going to get taxed 5,000 because you could do the 10 minus the 15. Okay. But the drawback for a business account, at least through Charles Schwab, is you need 250K. If people didn't even have 25,000 to open up an individual margin account, who's going to have 250,000 laying around to open up a business account? Not many, right? Um, Another alternative, which is the third alternative, is opening up like a traditional Roth, okay? A Roth IRA, a traditional IRA, a rollover IRA, and you could make it self-directed. So then you trade out of your Roth, which is there's benefits from tax perspectives for that because um, any gains that you're making, uh, is all tax deferred, right? And so that lump sum can keep working for you. But those are the three different individual options. Okay, same thing here. You go to Weeble. I think they only have it available. I don't think you could trade. If we look at their products,
Hey, Kashi,
um,
are you still
or
here?
if you
You
sign
want
up,
to
I
see
think they
my
make it easy to sign up
you want to see
for
my
like the
accounts, my
individual
funded
accounts.
accounts? Let me know if you're
Okay,
still here. I'll show you.
so like I said, 90% of people are gonna fall within that individual account range. Okay, so that's setting up a Charles Schwab or a Weeble. Now, Weeble has IRA. Okay. So the alternative to all of this, without having to put a lot of money at all involved in business, is 100,000. Okay. Well, that's good to know. Well, still, it's 100,000. So who the fuck has an extra 100,000 to put into the market, right? Um, so this is using your own cash. The other alternative, which many people are now starting to turn to, and it's become very popular uh, over the past several years, is using something called a prop firm. Okay, and I spent a whole year talking to the CEOs, getting to know the customers, getting to know things before I decided to make and join a firm to give to my clients, aka you guys, right? And that firm that we have partnered with is known as Apex Trader Funding. Okay. In the email that you guys all got, or within the chat that you guys all got, aside from the link, if you scroll down, there is information. So this is the email you guys all received today. If you scroll down, there is information about the prop firm and along with my coupon code so you could get it for even cheaper. So what a prop firm does, okay, is it
Yeah, check
helps
this out,
bridge
Kashi.
the gap in terms of the financial barrier.
Look
Right?
at this.
There's the education barrier, which I try to bridge that gap by providing education for you, but then there's the financial barrier, which, I mean, let's go back to an individual cash account on Schwab. How many of you would be willing to put up $5,000 of your own money in an account to try this out? Rhetorical question. I don't need an answer. Right?
Woohoo!
How many would be willing to do that? Probably not a lot of you, right? $5,000 is not little money, right? It's not little money at all. Um, and people work hard for their money. So why why would I expose my own capital that I'm working so hard for, thousands of dollars, to try something that I still brand new to? Okay. Um, Enter prop firm. Okay. So with a prop firm, I could come down here to this trade of eight plan. And for at least what it shows on here, $147 for the month. Okay, we'll talk about this here in a second. Just go with me. For $147 for the month, I get access to $25,000 in capital. Okay. For a $50,000 account, I need to come up with $167 a month. So that's an extra 20 bucks. Now, with using my coupon code, I think I brings it down to well under 80 bucks. Some months when Apex runs a big sale, it brings it down to even like 36 bucks. Okay? So for 36 bucks, I could get access to $50,000 in capital. Okay? But here's the thing, Drew, for $86, I get access to 50,000 bucks. That sounds too good to be true. Well, here's the thing. and this is how these firms work, is 98% of traders that try to trade. Okay, Carlos says it's $33,000, or excuse me, it's $33 with using my coupon code. So instead of paying 167, it's 33 bucks. Okay? 33 bucks is a lot easier to obtain versus coming up with $5,000 in my own cash. Okay? How many people, right? Yeses across the board, is $33 obtainable for you to do, right? Yeses across the board, right? It's gonna be it's a no brainer, right? It's like a fucking rhetorical question. I should see 1,000 yeses. Okay, so um, with that 33, I get access to this. Now, Drew, how is this even possible? How does this even work? Well, let's talk about how a prop firm works and the realities and truths about it. 98% of people that get involved in the market are going to fail for multiple reasons. Number one reason is they lack the knowledge. Okay. They lack the knowledge and they just jump in feet first. Like when we did this conversation earlier, there were many of you that had jumped in feet first and got crushed. Okay. The second reason is they don't have a consistent strategy that leads to profitability. So they don't have a high probability setup, and they're just kind of winging it when they trade. Okay. Also, probably a lack of education is to tie into that. Third reasons is that they can't get out of their own way. So they lack the mental discipline. And the three big discipline thing or mental things that come into play when you're trading in the market is greed, fear, and ego. So when you can't control those things when you trade, it leads to your detriment, right? If you're too fearful and you don't want to take a trade, that causes your timing to be off. If you're losing and you don't want to get out because you just don't want to lose that money, that causes issues. If you're greedy and you start to overtrade and you're trying to make more money, instead of just the little money that the market presented you that day, you can lose ego when you think you know more than what the market is doing. That also causes issues as well. So there's a lot of different mental things that come into play, but those often tend to be the three issues: a lack of knowledge, a lack of strategy, and a lack of psychological control. Okay. And so 98% of people fail, right? Even with me teaching you, I can teach you everything that I know, but if you're unwilling to implement and you're unable to control your emotions, you may not be successful at this, right? So they bank on that. And the average person is going to be paying $167 a month. So you multiply that by millions of people doing this, they're making tens of millions of dollars a day just through their monthly signups. However, the people that are successful at this, such as myself and many of my students, when we do pass their test, and I'm going to explain what their test is here in a second. When you do pass their test, they also make money off of the winners because they take a 90-10 split. You, the student or the client, is going to be able to keep 90% and the firm keeps 10%. So they're winning off of the losers, which is going to be 98% of the world. And they're also winning on the winners and taking a 10% cut of whatever that winner is making. It's an amazing business model. Now, for you, the student, you pay it's not the 167. Somebody said it's $33 using my coupon code. So you pay $33 for the month. Your goal, you have a profit goal. Let's say you decide to sign up for the 50K. Your goal is to get to $53,000, which is very attainable to do, by the way, and I'll show you how in a second. Your goal is to get to 53,000. Ideally, you would want to do that within the first month so you no longer have to pay the monthly fee. That monthly fee is going to stay there until you pass your what is called your evaluation. Once you pass your evaluation, you are no longer bound to that monthly fee. Okay. So that's kind of the incentive for you to try to pass it. Okay. In the event you go from 50,000 down and you lose $2,500, so you go to 47,500, you get kicked out and you have to re-sign up again. So again, that's how they're banking as well, is people are gonna fail and they're gonna keep re-signing up and re-signing up and re-signing up and re-signing up. And they may take 10 to 20 tries on month one. Okay, excuse me one second. They may take 10 to 20 tries on month one. So now do the math. You have millions of people doing this. Some people are doing it 10 fucking times, excuse my French, 10 times in 1 month. I'm trying not to cuss. Uh, and, that's millions of dollars these people are making. So when people do pass, they don't care about paying out because they're making a lot of money on the losers. It's my job as your mentor and as your educator to not have you be one of the losers, right? And to get you out of there. And many of our students do pass. And how can you show that, Drew? Well, we have within our thing a testimonials page, okay? And within our testimonials page, these are all the people, and I could just keep scrolling like this. These are all the people that are passing and getting, breaking their test. Now, the next challenge is once you pass, to keep it, right? And then to get your payouts. And we'll kind of talk about what all that is here in a second. But anyhow, so with that 50K account, you do it with what's called like in paper money. Okay. It's like a practice account. So for that $33, you get in a practice account, and your goal is to get to 53K. Okay. It's in and it's at no risk to them because you haven't got a real account yet. Once you pass your evaluation, you pay a one-time fee to become activated. Okay, it's like $80 or something like that. So altogether, you're all in about $120. Okay. Once you get activated, any money you're making, that's yours. Okay, that's your money. I believe in through Apex, the first $25,000 that you make in real money is all yours, and after that, it comes at a 90-10 split. Okay, now that's it. So you're getting in difference of putting money in your own account, you own that money. For here, you get to control that asset. Okay, so that becomes the difference. But the profits you make, that could be yours. Okay. Now, there is drawdowns, right? So what a drawdown is let's say, can you guys see this red line I'm drawing on the chart on the bottom here? Yes. Okay. So let's use this 50K as an example. Okay. So you start off with a 50K practice account. Okay, so it's coming at no cost to Apex, right? Because it's not real money yet. Your goal is to get to 53,000. That is your goal to make money. If you come down to 47,500, you are going to get taken out and kicked out. Okay, and then you're going to have to re-sign up again within the same month, or you're just gonna have to wait till the month ends and try again. Okay. Now, some people on average may reset up to 10 times. Some of my students don't reset at all. It just depends, right? Now, let's say you're up here to 50, let's say you get up to 52,500 in 1 day. So in 1 day, you're up $2,500. Let's say for whatever reason your kid is crying and he fell down the stairs, he or she fell down the stairs, and you got to go tend to your kid, and you completely forget about trading for that second. As this comes back down to 50K and you lose, so see this on Apex, there's this trailing threshold which is $2,500, and you lose that 2,500 and come back to where you started, because you lost that $2,500, which is what they don't want you to do, even though you're back to where you started at 50K, they kick you out and you have to re-sign up again. So the goal is to never lose $2,500 in 1 day. Okay. This is very obtainable to do. Now, there's going to be people in here and people that you are probably going to research or whatever, which I would encourage you to do, that say it's very difficult to get past their threshold, which is that trait, which is this threshold that I'm talking about. People say it makes it almost nearly impossible. I would say, again, these are people that are uneducated or they don't have a winning strategy and they just haven't figured out the system. It is very obtainable to do because I just showed you a whole lot of testimonials of people passing, hundreds to thousands of students passing within the boundaries of what is being set. So, well, then, Drew, how is it that they passed? Teach me, right? And that's what my job is to do, is to teach you. But the best way to go about it is hitting base hits. Okay. And I'll talk about the base hit methodology when we actually start to go over the charts, which is going to be very quick here soon. Um, so just bear with me. Um, but in terms of starting, okay, how many people would be willing to start for a low $33 fee versus having to come up with $5,000 in your own money, right? A lot of us, right? 33 bucks. I'm not going to get divorced over $33. I hope not, right? I'm not going to lose sleep over it. I'm not going to, not to say that $33 is also isn't hard to do, right? Some people are making $33 an hour, but um it's I can get that back a lot quicker than 5,000 bucks. You know what I mean? Uh, so anyway, uh let's get into the trading stuff. So once you set up, you select your Trade-O-Eight plan, you put in all your information, blah blah blah. You set up, you pay that $33, and then you get taken to a place called Trade-O-Eight. This is my son's Trade-O-Eight here. Okay. The okay. So within this Trade-O-Eight, my 14-year-old does it, which by the way, I don't know if anybody's listening from FTC. You're not supposed to have your 14-year-old trade, but I have mine trade. Okay, so anyhow, he has a 150K account. So his goal, he's almost there. He needs another $1,200 and he'll unlock this account. He also has a funded account, and in that funded account, um, he's made money there as well. Okay. I think he's up like 15K in his account today, 15 to 17K in real money. So this is the Trade-O-Eight software, and it's a very simple software that you can use. And I can take all of my trades through just clicking these two buttons right here. Okay. This is going to be a lot easier than doing options. And I'm going to show you options because I know many of you are interested in options, even though I would recommend not to be involved in options. But, what do I know? Okay. Um, so we'll cover all of this. And we'll kind of get into what do these are called candles. What do candles even mean? Okay. So I'm going to take a little pause right here before we start getting involved. And, I've been talking for like 46 minutes. Some of you may need a potty break, whatever. I got toddlers. I get it. Some of you guys need to go potty. So let's come back at 8:50. So I'm going to give you 4 minutes. Okay. Unless you got to drop a deuce, then hey, that's on you. But 4 minutes, come back and then we'll start with going over handles and going over the nitty gritty for the charts and stuff. So let's come back here in 4 minutes and then we'll get going. Okay. In the meantime, I don't have to go potty. I'm gonna sit here and I can answer questions. So if you have questions on anything that we've currently talked about for this 4 minutes that we are sitting here, feel free to put in some questions and I'll answer and then I'll get started. And again, how long does it take for you to how long how long gosh damn how long does it take to go from performance account to live? Some people do it within like 3 days. That's like the minimum that I've seen somebody does it. The quickest I've ever seen somebody do it is within two. They get funded in one day and the next day they're trading live. That's the quickest that has happened, that I've seen. On average, I would say somewhere between 1 to 2 weeks it takes somebody to go from their practice account to then getting funded. Yes, we are going once people get back at around 850, we're going to go over candles, kind of what candles mean, go over support resistance, and go over some very simple strategies that you can implement when you're first starting out. Why don't you like options? I love options. Options are great to me. I've made $25 million trading options. I don't like options for the beginner. So for you, if you're a beginner, I don't like options for you because it's very risky and it involves your own capital. So as a mentor, my job isn't only just to educate you, I'm also trying to minimize your exposure in the market. So why would I encourage you to do something that's extremely risky and comes at the potential of you losing a lot of money? Laura, that's so funny. Yes, you can link multiple evaluations into one thing, and I'll kind of go over that here in a second. I don't want to put start off with that. I don't just want to go one by one, and then we'll get into multiple accounts later. Jason, I will take a look. Yes, I trade both options and futures at the same time. Futures, I would say, is better for you as a beginner because there's no time decay and you don't need a lot of capital to get started with it. With $33, you can start trading. The code for Apex is Apex Wolf. It's in the email that you guys all got sent. And I know you guys all got the email because you guys are all here in the live, right? So in that same email, if you scroll down on it, you'll see the discount code. Okay, we are at 8:50. Let's go ahead and get started. You guys are all good to get going? Yes? Give me a yes. Okay. So, uh, just real quick because it seems like some people missed it. When you sign up, you're gonna come down. So let's do this all together, right? So you're gonna go to Apex Trader Funding and you're gonna click on Get Started. Once you click on Get Started, there's a rhythmic plan. You're gonna scroll down till you find Select Trade Ovate Plan. You're gonna scroll to the left until you find either the 25, 50K, 75, or 100K plan. My suggestion for you as a beginner would do the 50K plan. Okay, $33. Okay, so 33 bucks, sign up for the 50K plan. So you're gonna click on here, you're gonna click on Tradeovate. It's gonna take you to information. You're gonna put in your information, you're gonna put in all this stuff, and then you pay the fee. Normally it takes about somewhere like 24 hours, and then they send you an email to open up your Tradeovate, which is where we're on currently right now. So once this is opened, then you can start trading and kind of setting this up to be able to trade. And this is typically the image that everyone will see to kind of start. Okay. Within here, this is where you start to trade, and this is where we are at, where we start to talk about what the hell all this stuff is. Okay. So, and that's what we're going to do for the time being. So, we've already gone through the initial setup. Also, one more thing with the setup, when you go and do your setup, again, everybody got access to the email, but I'm going to do it one more time. Here is the link along with my coupon code. This is the coupon code to take it from $167 a month down to less than 100 or 33 bucks or whatever that is. Okay? So you go to Apex Trader Funding, get started, click the Tradeovate, and at some point it asks for a coupon code. That's when you go to your email, you copy the Apex Wolf, you put that in, and you get it for a small fee. Okay. All right. So now once we're here, this is where we're at. Now we can start talking about trading. Okay. Before I go any further, is there questions to get started? Yeah, so Tay, unfortunately, when we did start off, he used Top Step. So that is another firm that you guys can use. But all three of his accounts are through Top Step. All 20 of my accounts are in a firm with Apex. Nonetheless, you use Tradeovate, okay, which is the software. Okay. So, and I said that in the beginning, I am on my son's platform. Why, unfortunately, I'll get to that in a bit. Um, and why I have 20 accounts, I'll cover that. So stay with me because we will be covering all of that stuff. Okay. So let's zoom in on the plan here, on the candles. So what you are looking at, this is a chart, okay? And I'm going to get rid of this because you don't need that actually in your workspace at all. This is called, these little green and red things here are called candles, okay? Candles give us data, okay? Now, what we are looking at in terms of this data, okay, each one of these candles here represents 15 minutes, but I could change this to 5 minutes. Okay. Now, each one of these candles is going to represent 5 minutes of data. Okay. Now, okay, Drew, I get it. You can change the time of the candles. Like I could even change it from a 5 minute candle to a 1 hour candle. I could change it from a 1 hour candle to a day. And now each one of these candles represents one trading day. One trading days, by the way, go are Monday through Friday on a typical trading day. Trading futures, you actually have the access to trade Sunday through Friday. So you could trade Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. Saturday is off. And it is 23 hours, 6 days a week. Okay. When you are trading in stocks or you're trading options, that is going to be just Monday through Friday. Okay. We'll cover the different time zones that you could trade. Um, and kind of cover that. Okay. All right. So, once we're here, we're gonna, if let's just focus on the day. Okay. So if I look at the day, we could go all the way back to January of 2024, and we could see what's going on all the way to the 1st of November. Okay. With this stuff, with all of this here, I now can see some data. Okay. And some of that data can help me paint a story. All right. But first, we need to learn our ABCs. So, what these candles represent, there are two, well, there's actually three candles that we need to understand and learn. Okay, so I'm going to draw them here for you guys to see. Okay, and then we'll cover this. Okay, so let me take my little drawing tool. Can you guys see the white that I just drew on the chart? Okay, it's over there on the side of the right. Okay, every candle is going to have the same anatomy. Okay, so you have a body. This is going to be referred to as the body of a candle. And sometimes there's lines that come up and down the candle. That's the low point and a high point. These lines are referred to in the trading world as wicks, like John Wick. Okay. Excuse me, I'm doing this on a mouse, right? Versus like using a pen. So not the best at writing. It's actually probably better than my regular writing, to be honest. Okay. Now, every candle is going to have a body. It's going to have a low point and a high point, and then those lines are called wicks. Okay. Now, there are three types of candles. We're going to cover the two major ones first. Okay. I'm going to draw on this empty little green gray space right here. You have green candles. Okay. And sometimes the green candles, they also have their little wicks. Sometimes, not all of them. Some of them do. Many of them do, actually. And so you still have your same body. Okay. This is like the main activity that goes on. Body. You still have a high and you still have a low. Okay. Now, a red candle, you're going to have the same thing. You're going to have a body. It also may have its wicks for a high and a low. And then it also has its body. Okay, Drew, well, if they all have high and lows and they all have a body, well, what's the differentiation between the two? Why is one green, one red? It's a great question. When a green candle starts, it starts at the bottom. Okay. And by the time that candle closes, it closes higher than where it started. That's why it closes green. So it started at some point, it goes up higher, green candle. Okay. Now for uh a red candle, where do you think that's gonna start? At the top or the bottom? At the top. Okay. So this is where it opens and it closes. Okay. So because it closed lower than where it started, that's why it's red. Does this make sense to everybody? I need unanimous yeses because I can't go any further unless like you guys all understand this part. And if you don't, say you don't get it, and I can explain it one more time. Okay? You get it. All right, good. The last candle is a candle that you may see that looks like this. Sometimes it's colored instead of white, sometimes it may be green, sometimes it may be red. These candles we will cover what those mean at the very end. Okay. So now let's look at a real life example of some candle representation. Okay. So again, on time frame, on time frame here, we are looking at a day. So every candle is going to represent one trading day. All right. So let's go over important times. So regular hours, I'm just going to draw an R for regular hours. I'm here on the West Coast. Okay. So that's 6:30 a.m. Pacific Standard Time to 1 p.m. Pacific Standard Time. Okay. That is regular hours. Okay. Pre-market, which is essentially the time before the market opens, that's anywhere from some platforms allow you to start trading at 12 a.m. And that goes all the way to 6:29 a.m. Pacific Standard. Okay. If you're on the East Coast, for people that don't know how to convert time, if it's 6:30 for me on the East Coast, that's 9:30 for you. Okay. And then there is the after hours or aftermarket, whichever, however you want to call it. And that goes from 1 p.m. Pacific Standard Time, usually till about 5 p.m. If you're doing shares. If you're doing futures, you have access all the way until midnight, really, um, which that's where the European market opens. Okay, so those are regular hours. So every one of these candles that represents day, these are day candles. They consist of time that happened within just the regular hours. They aren't taken into account the pre-market or after hour activity. Okay, so when we are looking at each one of these candles represents a different trading day. It's only taken into account in showing the data that happened during regular hours. Yes, David X. Exactly. Right. So for those that don't get it, on the West Coast, 6:30 a.m. Pacific Standard Time for me. On the East Coast, that's 9:30 for you. Like right now for me, it is 9 o'clock a.m. Pacific Standard Time. If you're on the East Coast, that must mean it's what? 12 o'clock your time. It's noon. It's lunchtime for you. Okay. Yes, you're like time traveling, right? Come back over here. All right. And everywhere in between. Okay. So these are regular hours between 6:30 to 1 p.m. All right. I'm going to refer to it at my time. Obviously, you convert based off of your time. So let's look at an example. Let's use this one here. Okay. So as I'm hovered over this one, on September 19th, okay, and I know this is September 19th because if you look at the bottom there, see how it says 9/19/2024. You guys see that? Yes, no, maybe? 9/19/2024. You guys all see that? Yes. Okay. So on 9/19/2024 at 6:30 o'clock in the morning, the market, if you hover over to the right now, you'll see 19,647. So at 9/19, the market opened at a price, the NASDAQ opened at a price of 19,647. Okay. So let's do this here. I'll try to draw a straight line. So this is where we started, okay, around 19,600, and this was at 6:30 a.m., okay, on 9/19. By 1 o'clock p.m., the market closed right around here at 20,000. So it went up about 400 points in one day. Okay. So this was at 1 p.m. Make sense? So on a red candle, let's pick something else. Let's look at this day, September 3rd. Okay. On September 3rd, the market opened at around 20,000. So this is where it opened, and it was roughly 20,000. But because it came down and closed at 19,200, okay, so it lost 800 points in one day, it closed red. Does that make sense now? You guys seen? Yeah, points is dollars. Yes. You guys seen the difference now between the green and the reds? Does it making sense? Okay. Now that's for a day. If I was to change this from a day chart to 5 minutes, well, now we see what goes on every 5 minutes. So on November 1st, when it was, I could pick a random time, at 7 o'clock in the morning, this went from 20,139. And by the time that 5 minute time ended, it closed at 20,175. Then the next 5 minutes starts, and then that's going to give me data, right? So I can see by minute or by day how the price is responding. Okay. Now, one candle gives me a lot of data. Like I could go back to this day chart and I could see, hey, well, on this day, if somebody asked me, hey, Andrew, what happened uh on Halloween on October 31st, I can say, well, the market started at 2468 and it closed at 20,022. I can see that data instantly. right? So that's really great. But that's not going to help me from a day trading perspective. What does help me from a day trading perspective is compiling all this data to now. I just taught you guys the ABCs of, and the ABCs are understanding the difference between a red and a green candle. Now we need to put that into words and sentences. And those words and sentences come from looking at the overall picture of what we are seeing. So oftentimes when you are trading, what will happen is that you will come to a point where we may plateau. And then when you come down to the bottom, it may hold up as support. And you start to trade within this little range, right? And as I'm drawing this, you guys are probably seeing it, right? So these here are called, they could be resistance. And let me draw another simple way of doing this, right? So what often may happen, and it does happen, you may have a resistance level, okay? And I'll kind of cover what this means here in a second. And you may have a support level that comes down here, okay? And then in between there, you have activity, right? So you're going to have green and red candles and whatever. And it's never going to be this perfect, right? But sometimes it is. So, and then this green part, that's called your support or your ceiling, okay? So let's just think of a house, okay? Let's think of a two-story home. If you guys remember, I mean, I'm going to date myself here, but I'm 34 years old, but in the 90s, okay, there used to be these little power bouncy balls, okay? You bounce it and they go super crazy, right? So if I was to take one of those little power bouncy balls and I threw it at the floor, where is the ball going to go? Up or down? Unanimously, everybody. Up, right? It's going to hit my support. It's going to hit my floor. Okay. So think about that in trading. If I hit the floor, like how we're doing right here, right? It hits the floor. Where is it likely going to go up? It's going to, or where's it likely going to go? It may go up, right? Then I'm going to hit the ceiling. And once I hit the ceiling and the ball comes and goes up and touches the ceiling, where is it going to go? Down, right? Believe it or not, if you guys could remember this simple shit right here, and you guys can see it when you chart, you are going to put yourself at an advantage. It is that simple. It is Drew. That can't be it, bro. There is no fucking way. That's it. I'm telling you, this right here is 90% of what I look at when I trade. Where am I in relation to my support and my resistances? Where am I in my relation to my floor and my support and my resistance? Now, what can happen, let me clear this, right? What can happen, let me draw it. Okay. Ugh, that was horrible. So resistance. Actually, let me draw it a little lower. So resistance. Not that low. Sorry. Trying to get this perfect. There we go. So resistance and support. You can have activity that happens and falls within here, right? Boom, boom, boom. But let's go back to thinking of a two-story house. If I was to walk up to the second floor, what was my ceiling on the first floor has now just become my what on the second. So I walk up to the second floor. What was my ceiling on the first floor on the second floor just became my what? My floor, right? So an example is if I break through this ceiling and I come back, what was my resistance? What was my resistance has now shifted or potentially shifted and has now become my new floor. So it could, what was old resistance may now become new support. Okay. And then they could hit here and bounce and keep going. Okay. And then vice versa, I could break through this floor. Then this floor then becomes resistance again. This floor can become resistance again. And then I could come down even further. And instead of holding the support that I've had for a long time, I could break through that. I could break through that. And then now what was my floor, I go down into the basement, and then that becomes my resistance. Make sense to everybody? Yes? Okay. If you don't understand, stop me. I'm here for you, right? You're not I know this shit already. So this isn't for me, this is for you. So if you don't understand, ask the question and I can help you out. Okay? You guys all got it? Okay. So with this info, this helps me understand what I'm going to do on a given day. Now, there's two things that I can do when I trade. I can either place a trade that the market is going to go, hang on, wrong color. I could place a trade that the market's going to go up, or I can place a trade to say the market's going to do what? Instead of up, down, right? Those are the simple two trades that I can take, right? Up or down. To go up, we call this in the trading world going long. If you're trading options, that's called buying calls. In sentiment, sentiment is like the overall hypothesis of what people are feeling that day and kind of what you can see the market is doing. That is called being bullish. Okay. If we're coming down in the market, that is called going short. If you're trading options, that's called buying puts. And the overall sentiment that the market has on that day is considered bearish. Does that make sense? You guys understand those definitions? Important definitions. Okay. If we're going to go up, we consider that going long, right? It's almost like go deep for the pass, right? Go long, right? In the options world, that's called buying calls, and that's bullish, right? Think of like a bull with its horns, right? It's like fucking bucks up. Bullish. You're going up. Short, we're thinking it's going to, if we're coming down, right? Just think about a tall person and a short person like me who's only 5'6". I'm short, right? I'm down. Puts, well, I don't know. I can't think of an analogy for puts, but bearish, I don't know. Think of bear swiping down, right? Bear is not really going to swipe up, right? So those are some of the terms that are used in the trading community. Okay. Or yeah, like put it down, go down. I like that. Boom. Okay. So let's do a little pop quiz here of let's pretend I wanted to buy and go long. Okay. And let's say I wanted to go, let me use a different color like purple. Let's say I wanted to go long right here. Would that be a smart decision? And yes or no? I should have did a poll for that so then we could see, but and I don't know if I have any polls for yes or no. It's all right. What's this one? No. Okay, so the answer is no, right? And why not? Why would I not go long right there? I'm too close to resistance, right? I'm too close to my ceiling. And what's likely to happen at my ceiling? it may come down, right? So I don't have enough data yet to tell me that it's going to break up, right? So in order for me to want to go long, as I get around this price of and we could even use the price 19,600, right? So in order for me to want to go long, we have to go above 19,600. And then that 19,600 has to hold support. Now at this point, I would be willing to go long because then I could wait until I hit my next resistance level, right? I'm going to have another window at some point. I don't want to get long if I'm below it, okay? Now let's think about going short. All right, we'll use a different color. Instead of purple, let's use orange. Do I want to go short right here? No, right? Why? Because I'm close to support. And what happens on the power bouncy ball when it hits the floor? It's going to bounce right back up, right? The only time I want to go short then is once I go underneath that level and break out. Okay? This is where I want to go short, not here. Make sense? Okay. Now, what you need to understand, right? And is that these are happening at prices. So this is a term called price level resistance or price level support. Just think of level, it's like a horizontal line, right? It's happening at a certain level of price where we see some of that resistance or support taking place. Something else to know is that at that level, it's not always going to stay a resistance. At some point, it could become a support. Therefore, if it could either be a resistance or a support, what determines at a certain time if that price is going to be a resistance or a support for me? What's going to matter? I know that may be a confusing question, but if resistance or support isn't a matter of the line, what matters then? Exactly. Where price is. Exactly. That's exactly what I was looking for. My relation to that line, right? So if I'm above the line, so if I'm hovered over here, this 19,600 is what to me? What is it potentially for me? If I'm above 19,600, what is it for me? It's a support level. If I'm underneath 19,600, what could that 19,600 be for me? Resistance, right? So it all matters where the relation of where that candle is at that given time to that level. If it's above that level, it may hold support. If it's underneath that level, it may hold as a resistance. Does that make sense? Did I lose anybody there? Right? Don't feel, again, this is for you. This ain't for me. I know this shit. Right? Yes, lost. Okay. Stephanie, I'm going to explain it another way. Okay, let's just draw a simple line. So if I have candle activity, and let me do a different color, and let's use a price. Let's use 19,200 as my line. And I'm going to color it orange because it's not going to matter red or support or resistance. Okay. And I'm going to draw white as my activity. If I stay above
Yes, sir.
this
We got a
white,
veteran in the house. 6
notice
years
it's
on the
holding
charts.
me up.
Nasdaq straight trades
what
only.
Stephanie,
No options. Margin shorts been taking
what
a
is
break
that then
for a few
called?
months.
Because it's holding
Me?
me up. Just think about my
Since
What is that?
2009, brother. Since 2009 here.
I'm not trying to put you on the spot. I'm trying to have you learn because of you're learning.
Since
Right?
2009.
Same as you also learning. Stefan Leone. What is that called? Help me help you. It's called support. Exactly. Right? So because it's holding this level, it's support. And notice every single one of these candles, are they above or below that line? Stephanie. Are they above or below that line? They're above. Okay. So if I'm above that line is going to hold as a floor for me. Okay. So now let's do the opposite. Oops. If I go below that line and activity is happening below, what is that line to me now? It's no longer support. What is it?
I started with options, guys.
Stephanie.
Hey, Randy.
It's resistance. Okay, and where is that activity? Is it above or below the line? All that activity is happening where? Below the line. Okay? So if the candles are below a level, that level may be then what? Resistance. Okay? If the activity is happening above that level may be support. Okay? That's all that I was trying to say. So it doesn't really matter the level because now I could have activity that looks like this, right? Where I have identified that that is a level that I need to pay attention to, but oh my gosh, can I draw a straight line? Here we go. Let's try. Close enough. Okay? I could have an instance when I have activity I have activity happening above this line. So during this phase, this is support. And then maybe I have activity come underneath the line. And during this phase right here, this is resistance. And then if I go back above, well, now this line is now support again. Okay. So all I'm trying to say here is that one level isn't always going to be resistance. It's always not always going to be support. What matters is where the candle is or these candles are in relation to that line. Okay. And depending on the relation, that helps me understand if I'm going to go for a trade up or a trade down. To further do this as an example, if I start the day, and I'm going to ask Stephanie, if I start the day right here, what am I thinking of doing? Going long or going short? Christopher and fucking Matt, stop answering. Going long, no. Short, right? So we are at a resistance, right? Because we're underneath. What happens when we get close to resistance? If I hit the power bouncy ball and it touches the ceiling, where is it going to go? Stephanie. If I hit the ceiling, where is it going? If I take a ball and fucking throw it at the ceiling right now, it's going to come down, right? So because I'm underneath and this is my resistance and this is where the ball's at, what's going to happen? The ball is going to hit the ceiling and do what? Go up or down, Steph? Potentially, right? What's it likely going to do? Come down, right? So if it comes down, I want to be able to capture that move to come down. That is called what? Going long or going short? Short. Perfect. Okay. I know it's going to take a little bit, but this is why we are doing this education, right? But I wanted to make sure you understood that. Okay. Now I'm going to do another example. And you're probably like, Drew, get the fuck off me already. You're fucking no, because guess what, Stephanie? You're the only one that is being ballsy enough to get this, right? Or to show that you don't understand. And if you can understand it, then everyone else is going to understand it. Okay. So people don't give her a fucking hard time. You guys all started somewhere. Don't be dicks. Okay. So let's do the opposite. If I am right here, I'm going to draw a circle. What am I thinking of doing? Going long or going short? Steph. For the love of fucking God, Mama Lopez. Going long. Why, Steph? Why am I thinking going long? Stephanie, why am I thinking going long? Because we want it to go back up. Yeah, but why do we have a feeling that it's going to go back up? Because we're at support. Exactly. So because we're at support, the likelihood that this bounces again and goes up is probable. So that's where I want to go long. Okay. Let's go. All right. I feel like you're getting it, right? Feel like you're getting it. Let's go. Come on. All right. So now it's a matter of, well, Drew, this is great, but how do I see this on the chart, right? Well, we can see it on the chart because there's going to be pivots that happen on the chart where we can't break price, right? Example, we couldn't, and remember, each one of these are representing, let me just double check that and confirm. One of these is representing a trading day. Okay, so one whole day of data. So we could see we've had some type of response at 20,800. When we're above it, 20,800 is support. When we're below it, 20,800 is what? Stephanie? What is 28,000 currently for us because we're underneath it? It's one word, resistance. Fucking beautiful. Okay? And because we're so close to resistance, and here's our support down here, way down here, what am I thinking of doing? Going long or going short, Stephanie? Don't fuck this up. Stephanie, going long or going short? I'm right next to resistance. Fucking A. Oh, we'll get there. We'll get there. Short. Okay. I'm at resistance. Where's the power bouncy ball? It has hit here and is likely to come down to where? My floor. Right? So I have all this room to let this ball come down. So I'm looking to go short so that this has potential to come down to here. And then when I hit support, because it's going to bounce, this is where I want to go long. And then guess what? When it hits resistance again, this is when I want to get out of the long and go short so then it could come down to there. All right. We're getting it. We're getting it. All right. All right. So we have a level right here at 20,800. I also have a level that I can see at around 20,000 or at 20,000 even. Okay. I can also see a level ballparkish right around here at around 18,000 something. Okay. So these are my levels that I see, right? And how I pick these levels and why I pick these levels is because they're respected in more ways than just one. What I mean by that is that if we look historically on data, over here, this 20,000, I'm going to focus on 20,000. Over here, 20,000 is what for us? Because we're above it, what are we? Everybody together. If we're above 20,000, what is 20,000 holding up as? Support. Okay? So the 20,000 currently is acting as our support system. Over here in the early months of August and towards the later part of September, we were underneath 20,000. So what was 20,000 for us? resistance. Okay? And if we go to the end of May and early June, because we were above 20,000 again, what was 20,000 for us? Support. Okay? So we can see that that 20,000 level, and you can see the bounces, right? See how it bounces right here and goes up? See how it hits here and comes down? See how it hits here and goes up? There's bounces at that level of 20,000. When we're above it, it's holding support. When we're underneath it, it's holding resistance. And so, because it's been both a support and resistance for me, I feel that that's a very good level to understand. Okay. So, that is what we call key levels, is that they've been respected as both floors and as ceilings. What matters is the relation of where that candle is to that line. If we're above that line, that level is going to hold support. If we're underneath that line, that level is going to hold as resistance. Does that make sense to everybody here? Say I don't get it if you don't get it. Okay? We all get it. Stephanie? Yes. Fuck yes. Okay. There we go. So, this helps me because now, shut the fuck up, Dennis. I know you're playing with me. You playing or not? You get it. Shut up. You get it. Okay. Because now I can start to make my decisions off of this chart. Okay. So let's clear this up again. Let's draw this over. So I have a level at 20,800. I have a level at 20,000. I have another level here. We said it was like 18,800. Okay? So these are my levels.
This is what I'll be trading, guys.
Right now, this is where the candle is. Maybe let me draw a different color candle so we can see this. Let me do yellow. Right now, this is where the candle is. Are we closer to support? Okay, so 20,000, what is that for us right now? Because we're above it, what is 20,000 for us? Support, okay? So this 20,000, because we're above it, is a support level. Okay? All of this right now may hold up as support. Where is our resistance then? Give me the price. What price is resistance? 20,800. Okay? Because we can see when we touch that, it dropped. Okay? So here's our resistance. This is the candle. Is the candle, let's go, who was it that said they didn't get it? Was it, let me see. Dennis, are we closer to support or resistance right now? Oh, hey, Lisa, what's going on? Dennis, are we closer to support or resistance right now? We're closer to support. Okay, so we just bounced the fucking power bouncy ball and hit the floor. What's going to happen as we're at support, Dennis? Are we likely to go up or down? Based off of this data, are we likely to go up or down? We're likely to go up. So because I'm hypothesizing we're going to go up, and I have all of this room, and I'm going to color it in like cyan fucking blue here. I have all this room to go up. What am I thinking of doing then? Going long or going short? Exactly. I'm thinking of going long. And from where I get in to where this goes, this is a difference of about 800 points or $800. Okay. That's potential. That's a lot of potential for me to make a lot of money. Excellent fucking Stephanie. I see you there getting it too. Okay. 800 points is insane. Okay. Now we're going to cover what this means here in a second, but this is very simple. Now, let's do another. You guys are all getting it. I feel like it. I feel like it. I feel like it. Okay. So let's do one more example here. Let's pretend, for shits and giggles, the next trading day happened and it closed right here. What now has $20,000 become for me? What has now this $20,000 level become for me? all together. Resistance, because I'm underneath the level now. Okay? So now this 20,000 is no longer support, it's resistance. And now my other support is at what price? What price is my next support? 18,800. So if I was to ask you now, if I was to take this little yellow fucking thing and point at this candle, are we closer to resistance or are we closer to support? We are closer to resistance now. And now, what am I thinking of doing? Going long or going short? Going short. Exactly. Right? And I have all of this room for it to drop. Okay? This is a very simple way, if I can follow this system, to make money. All right? And this is $1,200 that this 1,200 points, $1,200 that this drops. Okay? Now there can be complexities with this, okay? Where, to make it more realistic, this can go red and then the next day go back up to support and then go all the way up here and then break, right? Those are called, what are in the trading world called false breakdowns, right? We could also have it where it looks like it's going to go up and come right back down. Those are called false breakdowns. Thus, you have to protect yourself in the event you are wrong. This isn't 100%. This gives us a nice edge to be right, but there's still the probability that we can end up being wrong. This is where a term called stop losses are important. What a stop loss is saying, hey, I am hypothesizing based off of the data that I have that we are now at a resistance. And because we're at a resistance, I think that we are going to go short and come down to here. And that's where I'm going to take my trade, is right here. This is where I'm going to look to get in. And I'm banking that we're going to come down. So you could call it like so for some people to kind of relate it, I'm placing a bet or I'm placing a trade that this is the market's going to come down. However, I could be wrong. So in order, if I am wrong, what I'm going to do is set what is called a stop loss, and I'm going to put my stop loss right up here, let's just say. And what I'm saying is, if this does start to make a U-turn and start to go the opposite way of what I was thinking, take me out because I'm wrong at this given time. And I'm okay to be wrong and lose a little bit of money. Okay? Take me out before it comes way up here and I lose a lot of money, right? So it's a protection, okay? Like a fucking Trojan, right? It's protection. All right. So that is the idea of a stop loss. All right. It protects you in your bottom line in the event our hypothesis was wrong at that time. Okay. Now, there are other things before getting into this trade, aside from using support and resistance, that can help us get in. I'm not going to cover that. I don't have the time to cover that. That's like another 2-hour fucking conversation. I do want to get to the Q&A segment of this here in a second. But this simple strategy of just drawing supports and resistances and drawing these lines can help us make decisions. And if I think I'm going to go long first, I hit the buy button. So I go green first. If, and as soon as I want to get out, I hit the sell button. If I think it's going to come down first, I hit the sell button first. And then to get out, I hit the green button. Okay, so I'm going to say that one more time. If I think that this market is going to go up, I hit the green button first. So I hit green first, and to get out, I hit red. Okay. If I think the market's going to come down, I hit the red button first, and to get out, I hit the green. Okay. It doesn't matter whether you do the buy the bid or sell the ask or buy the market or sell the market. Me, preferably, I would just stick within here and just do buy the market. Okay. Now, Drew, how does this make me money? Okay. Let me go back a second. Let me go back a second and let's focus on the call trade that we had drew. Okay, let's focus on the call trade that we had drew. So we said, hey, this has room to come up to here, and this is 800 points. When you are trading futures and you are trading the NASDAQ, for every $1 that the NASDAQ moves, that equals plus or minus $20 in ROI for you. Okay. So if I go long right here, and I think it's going to come up to here, and I make the full 800, right? Because 20,000 minus 20,800, that's 800 points difference. And I went long, so I was right. So that's a plus for me. So 800 points or $800 move times $20 in ROI, that is what? What's 800 times 20? That's $16,000 that I would make off of one contract. If I captured the full 800 points, that is $16,000 in profit. Okay? If I was trading with real money, that 16,000 is all mine. And guess what? It came at the cost of me having to put in $33 to get this account. That's just with one contract. Okay. However, not every trading day are you going to capture 800 points. Okay. So I want to make it realistic. So let's go on. Often when we day trade, we use the 5-minute chart. So uh let's go to Friday, where Friday was a bit choppy. But we could even just use that day. Okay, so Friday the market opened here at 6:30. Okay, so this is where the market opened. So we had all of this support right here at the market open, right? You see how all of these candles are above this 20,300? Yes, everybody? You guys all see how they was holding above that 20,300? Okay. Well, when these candles went underneath that 20,300, what did that 20,300 become? Support or resistance? It became resistance, right? So it broke underneath my support. So what am I thinking of buying? Going long or going short on the day? I'm thinking about going short. And I have room until my next floor. Okay. So this goes from 20,300 and it comes down to about 20,100 ish. Okay. So this drops 200 points. So 200 times 20 is what? $4,000. If I captured the full move from right there to down here, that's 4,000 bucks. Let's just say you didn't even capture even 100 points. Let's say you only captured 20 points. What's 20 times 20? 400 bucks. Let's say even on this for fucking $100, you paid $33 for the potential to make 400 bucks in one day. What is that ROI? You 10 extra return, 15 extra return, right? I mean, it's a no-brainer, people. It's a no-brainer. And if you fuck up, and in the event you fuck up, guess what it came at the cost of? $33. Okay? So, anyway, this is how very quickly how we can do this. Okay. Now, let me get into options just really quickly, just for the sake of teaching you options. Okay. So this is using in options, you can't use that platform you were using. This is going through Charles Schwab, and this is putting in $5,000 of your own money, or you have $25,000 in a margin account. And I can already tell you, right? I can already tell you there's like how many people are at this point interested in this right now? How many people want me to cover options? There's some of you, right? There's probably a lot of you though that don't even want to cover options because you're gonna go to futures, right? But I'm gonna cover this anyway to show you the difference between the two. Okay. So let's do that. Let me come over here, set this up, kind of cheating a little bit. Okay, so this is using your own money, which again, I have no idea why you guys would want to fucking do this, but anyhow. So in options, we often just trade the S&P 500. Okay. So in options, you would come over here, you would load this up. I teach everybody how to load this. I'm not going to spend the time to teach this because that's another hour. You will come over here to options, and then you have what is called an option chain. Okay. In the option chain, you have to pick what is called a strike price. You can already see how this is already getting confusing to starting to pick how you're going to place an order, right? It's a fucking lot. Okay. So if we turn this into the 5 minute, 5 day chart, this is how we day trade. I would pick because it started at 572. I would come over here to the options, pick 572, and I will put calls on the top. And then if I was gonna go puts, I would go 572 for the puts. And then this is where I come and place my orders. So if I pick a call and this goes up in my favor, this has potential to make some decent money. This goes from $3 per contract up to a high of 450. So let's just show some of the difference, okay? So if I was trading options on that same Friday, or Thursday, whatever day it was, and I got this move here, and this went from $3 to 450, what percent is that? That's about 3 into 4. That's what, 30%. That's about, yeah, it's like 50%, right? So roughly about 50%. So this is 50% ROI. So if you put $1,000 in of your own money, you would make 500 bucks. Okay, but you had to put in $1,000 of your own money to be able to make the same $500. Okay, now I could put stops in place so that I only maybe lose 200. But let's just say in the event, okay, let's say in the event you put $1,000 of your own money into this, and you put what is called a stop at 20%. Well, what's 20% of 1,000 people? $200. Okay, so in the event you put a stop and you lost $200, okay, which was 20% of that 1,000, you lost 200 bucks. Let me ask you this. How much, okay, that's $200 of your own money, by the way. Okay. How much does $33 go into 200 to 200 bucks? How many times does 33 go into 200 bucks? 6, right? About 6 times. You would have to fail in futures 6 times over before equaling the same $200 that you lost on just one trade. And in futures, I only need a 20-point move to make $400, where in options I need to put in 1,000 and make 50% to make, or hit 40% to make the same 400. This again, why would you ever want to do this? And I'm not trying to sell you guys on doing futures, but it's like, why would I risk that? Why would I risk my own money to do it? I still trade options because I'm good at what the fuck I do, right? I'm not trying to sound arrogant by any means, but some of you guys are beginners. Many of you guys are beginners. And as a beginner, why would I risk my own capital trying to figure this out? right? That's like being a boxer, okay? And you're trying to get into the ring. Why would you ever go when you're first starting to learn boxing, getting into the ring without headgear on? Doesn't make any sense at all, right? You're gonna get fucked up really bad. Okay. So these are some of the things. And I want to cut it short because I want to answer questions that you guys may have, which is also going to be insightful. And I'll spend about half an hour doing that. We're already at our 2 hour mark, by the way. I went a little over, but I want to spend some time answering questions for you guys to try and help you guys out. Okay. So uh we did cover quite a bit, but as you can see, there's still a lot more to learn. Okay. So one thing that if you guys want, right, and I'm just gonna put this, and I'm gonna say it once. You guys ultimately decide what you want to do. It doesn't, I could give two shits less, right? And I don't mean to cuss. But right now, going back to the thing I sent out, we also have 50% off of our university right now. So if you wanted to get more education with me, all you would have to do is go to stockmarketwolf.com, okay? And in the university, you would come down here. There's a video explaining all the things you get. Monday through Friday, I trade live with my students. So you can come and get that. You could get real-time education, and I walk you through what I'm doing. We send a watch list out before the market opens. I'm in the room with you, providing guidance as we're taking trades. So if you want that, all you have to do is click on the university, and then you put in that code that I sent out in the email today, which is where is it? Right here, Wolfpack 50. Okay, and that's gonna give you 50% off. If you don't want our education and you just want to trade live with me, you could do our trading membership, and the code for that is Wolfpack 25. Okay, so if you guys like this teaching, if you want more of it, that would be the route to get more involved with me. And again, futures, you use the discount code Apex Wolf. Okay. All right. So that's enough of that. I'm here to answer your questions now and see where we go. Is your course from beginner to advanced? Yes, Sarah. It takes you from knowing absolutely nothing to then being able to trade live either on your own or with me when I do my live stream. Okay, in that university, you get a full year of access to trading live with me. I trade live every day, except if something happens. Like if there's an emergency, I have something with family, I'm sick. Sometimes I sleep in, I'm human, we're all human. Sometimes that happens. Those are rare. Or if I go on vacation, but I let everybody know. Okay. Um, Thank you, Andrew. How are you able to close the position in options those days that you get up to 1 million? So I just get out there. I hit the sell button before the market closes. I make my money and I'm good. So yes, the net what when we are trading futures, we trade a symbol called NQ. NQ stands for the Nasdaq. When we are trading the Nasdaq is comprised of a bunch of other companies, but the two main movers for the Nasdaq is Apple and Nvidia. So when we are trading, we look at those other symbols that drive the market to see what the overall sentiment of the market is. If everything is moving in conjunction with each other and say moving up, then I know today is going to be a bullish day. I am more likely to buy calls and catch the wave going up. If everything's coming down at the same time and all those individual companies are coming down at the same time, I'm thinking of going short. Obviously, I'm looking at my supports and my resistances, and I think to go short. And then as long as everything's trending down, I'm able to go in. On days where some of the tickers are going up, like let's say Apple's going up, but Nvidia's coming down, then I start to get into chop. And when choppy days are recognized, that's when I don't want to trade because things are just very volatile and just going up and down. I like to trade within a trend. Okay. Do you execute futures trades on Tradeovate? So as a beginner, I would say just use the Tradeovate system. Eventually, what you want to do is link that to a software called Trading View. Trading View gives you a little bit more bells and whistles to help you with your trading. But everything that you need is within the Tradeovate platform. So I say just keep it simple and earn your other setups. Okay. Okay, the 20 accounts for futures. Thank you for bringing me back to that. So here's another thing with futures, and I could explain this from firsthand experience with myself. On Thursday, we traded in the market and the market came down. In options, I was able to make 60%. Okay. Normally, when I trade options, I trade with $100,000 in buying power. Okay. When I place my trade, I put $100,000 of my own money into it. So I made 60%. I made $60,000 within an hour. Okay. When I was trading futures, that move dropped 200 points. Okay. So if you were to take 200 and times that by 20, that's $4,000. In one account, I traded with 10 contracts. Okay. So you take $4,000 and times that by 10, or excuse me, you take, it dropped 200. That's two, it dropped 100 points. Sorry, not 200 points. It dropped 100 points, which was $2,000. You times that by 10, that was $2,000, or excuse me, $20,000. Okay. So that's $20,000 in one account. I had 20 accounts linked together. So now what just became a $20,000 trading day in one account just became a $400,000 day in total. So I'm multiplying and multiplying by how many contracts I trade with and also by how many accounts are linked. So let's use a simpler example. Let's say you only caught a $10 move on the NASDAQ on one day, which is very realistic to do. Okay. Every point is 20 bucks. So you take 10 times 20, that's $200 in one account. Let's say you had 20 accounts linked. Well, that's 200 times 20. That now just became a $4,000 trading day for you with a very tiny move to capitalize. Okay. So that's one of the benefits. And that's where I said in the beginning why it's unfortunate that my son went the Top Step route to begin with versus Apex, because at with Apex, you could get more accounts linked together. Each account is still going to cost its own thing, though, right? So 20 times 33, that's $660 to invest for 20 accounts. But who cares if I'm able to make 400,000 or 10,000 or 1,000, right? What about drawdown? So drawdown, when I teach my traders how to trade futures, we go very heavy into risk management and we reverse calculate. I'm not going to do that here for free, but for our students, we cover that. And there's a whole system of how we go about doing that. How to know when to get out of the trade when it stops breaking, when it breaks my rules to stay in. So I teach my students how to set very critical rules of what's the requirement to get into a trade and what's the requirement to get out of a trade. And when those rules hit, that's when we take our trade, and that's also when we get out of the trade when they hit to get out. There's a system. Everything is systematic. We do have a Spanish course. That Spanish course is going to come out in Q1 of next year. Yes. So if you did instead of doing 20 accounts, if you had 10, just do the multiple. So let's say again, you catch a 10-point move. Every point is 20 bucks. So 10 times 20, that's $200. Okay. And you have 10 accounts linked. 200 times 10 accounts, that's $2,000 for the day on a very small move. A 10-point move is extremely likely to do. Okay. When a stock is at all-time high, how we approach that is based off of the activity that we are seeing in the pre-market, and then we look at the response real time uh, in terms of volume and stuff when we are hitting certain price points. When I draw my levels, I do a top-down analysis. I start from the year, I go to the month, and then I work on the week. That helps to keep me gauged. Yes, all 20 accounts you could get for the price of that $33 or whatever that is with my coupon. Correct. $33 per account. Apex Wolf, okay, is the coupon code. I don't know if it's 33, it may be like $80, okay? Whatever it is. What books do you recommend to start learning? There's a book called Atomic Habits. That's a really good book. It's about mindset and doing the right habits every day to lead to success. I say start with that first. Other books in terms of trading, Trading in the Zone, The Disciplined Trader, and Market Wizards are three must-have books that you read. So Trading in the Zone, Market Wizards, The Disciplined Trader, and then the other book is called The Best Loser Wins. Those four trading books specifically are all you need. Yes, the trend is your friend. Damn, there's 175 messages. Okay. Andrew, could you talk about Apex Performance account? Hang on. Can you join the university now or just be put on the you could join the university now. Everything is open. So go and get if you want the university, go and get it. For beginners, do I sign up for Apex first before signing up for your intro university? Or can I do it at the same time? You could do it at the same time. Yeah. The university's education, Apex is where you're going to be trading out of. How long does it take a beginner to learn futures? Everybody's different. Normally, on average, it's within 3 months. Okay. What trade copier I use? I just use it within the Trade system. You could link multiple accounts within there. There's also like Ninja Trader, stuff like that, where you can link accounts as well. Looking through some of these questions. The books were The Disciplined Trader, Market Wizards, Trading in the Zone, The Best Loser Wins, and then Atomic Habits. What do I do with all my profits? I invest. What indicators do I use? I use the 9, the 20, and the 50. Yeah, let me just go to the bottom. How do you place an order on the Trade I showed you guys it was that green button or that red button. Buy the market or sell the market. Have I had payouts from Apex? Yes, of course. You can do TradingView, but TradingView costs a monthly fee to use. So like that's what I said. Earn your setup. So start making money first just using a simple platform like Tradeovate and then earn another account and then earn being able to use TradingView, right? E-Trade, I have never used it, so I couldn't really talk on it. How many trades do I take a day? I try to take no more than 2 trades a day. I limit myself to 2 trades per day. Green or red? If you do the university, you get access to all of the courses and you trade live with me. Yes. Trying to skip through everything here. Can't get to every question, guys.
Alright,
How
guys,
many
he's
courses do
he's
you
done
have?
here.
I
I'm
have a
gonna go
course
ahead
on
and wrap up
options
this.
trading, futures trading, shares.
I'm gonna go ahead and wrap up the stream. I'll catch you guys tomorrow, 30 minutes before market open.